Hello everyone. Today we're going to be talking about ETF stocks and why I recommend to buy them. And so I'm 13 when I started. I'm 13. I started Fidelity Youth account, and you can start at 13 too. Buffett started when he was 11, so that's 2 years younger, and I deposited $25 every week into my bank account to save up. And I was age 5 when I started. I also did chores. Um, and I deposited $10,000 US. This was my money that I got from doing chores like shoveling and mowing the lawn. Um, I can only get 0.5% to 2% every year. Um, I think this is an unsuccessful investment, and now I changed the investment method to the stock market. If I buy ETF, SPY, or VOO, I can get 15% a year. Um, if I buy QQQ or QQQM, I can get an annual return of about 23% in a year, and this kind of stock market return is much higher than the normal. Um, Also, Buffett started at 1965, and SPY's average income is 11%. Most of the time, about 74% of the time, the price increases only 26% of the time lost. And also every 2 weeks, if you invest every 2 weeks, stick, and you don't overdo the price or underdo, you can also you will also be successful. And I help my mother to clean and edit videos, and I can get $500 per month. And I will invest if you want to understand ETFs. You also in indexes like S&P 500 index that is buying 500 outstanding companies. So there's like 500 companies in that, which I recommend because it's better than just buying one single company. So you get 500. Um, and ETFs are really good. Buying QQQ or QQQM is excellent because you can get 100 different companies like Apple, Tesla, Microsoft, Amazon, and more. Buying ETFs may not want to buy Tesla in 2019. It will raise 1,000 times in a short period of time, but it will not fall 70% like Facebook or PayPal. Um, and Buffett stock BRKB. In fact, the ETF composed of dozens of high quality companies. Um, the average return from 1965 to 2020 was 20%, which is double the average return of S&P 500 ETF SPY during the same period, which is 11%, so that's almost double. Um, an investment strategy is friends like, what do you think about my opinion? And this isn't true. I'm not telling you guys what to do. I'm just asking and sharing my opinions. So if you have any questions, you can comment. Um, and yeah, I'm just a 13-year-old student just giving out my advice and asking for advice. Uh, I'll publish a video every 2 weeks. Regular investment, a regular investment can cause risks and reduce prices. For 40 years, you can have 5 million in the next 40 years if you do it right. And please follow me. Thank you. So let's get into an example of some of these. So here we're on Fidelity and we're looking at QQQ. This is from theirs. You can see it's 5 stars, and you can also see on the chart when it drops and when it goes up. So we're on daily right now. You can see here it went down a little, but even if it goes down, it doesn't mean you should sell it because it can still go up. You can see here we have 1 year, how much percent, 3 years, 5 years, 10, and that's what it should be throughout its life. You can see some other companies here, but the good thing about ETFs is that you can buy them throughout the day whenever you want and sell them, so you don't have to wait to till the end of the day. This is the Dow Jones. You can see this is when the Great Depression was, so that's when the stock market crashed. But then you can see how fast it rose back up because it was such a good company. It goes down, up, but it's going up at a stable pace. You can see how much more green there is. The green means it's going up, red means it's going down. You can see the negative. A lot more green. And you can see how much the price has gone up. The more they've gained. It started at $99.21 in 1915, and now in 2022, it's up to 36,000, which is a very big increase. Here we have NASDAQ. You can see they're going up higher and faster looks, but they go up stable and then they peaked here and keep going up stable. You can see some of their prices. This is second on our list because it's cheaper, and also this one started in 1972, while Dow Jones started 1915. You can see there's a lot more green than red, a lot more. Next we're going to S&P 500. This is a chart, and it was a index back in 1927. Performance is calculated at the percent change of the last trading day of each year, the last trading day of the previous year, the current price of the S&P 500 as of February 18, 2022, which is 4,348 and 87 cents. You can see this chart looks a little different, but it's the same type of understanding. Shows the percentage throughout its lifespan. You can see the red, which means it goes down the longer, the more it's went down, but it has more green, and I would say it goes up and down. That's why it's third on our list, but it's still a really good one to invest in. You can see the years. This started 1928, and there's a little more red, but there's still more green than red, which is good. You can see here a lot more green, and 4,796 as of this year. When it started, it was only $24. And you can see in 1932, their lowest price was $9 because you see they lose, so they have to bring down the price so people want to buy it again. Here, they went up because they dropped their price. Good. Okay, next we have Russell 2000. The Russell 2000, SPY stock, and VOO and QQQ are all related to NASDAQ. They're like in it. So Russell 2000 is a smaller stock. It was going pretty slow at the beginning, but then it started to go up and down, up. You can see here it dropped like a lot, but most people would think to sell it right away, but you never know. Mostly it'll go back up. You see here it goes back up. Some news about it. Okay, now just SPY stock. So SPY or SPY, VOO, and QQQ are all related to NASDAQ. So this is SPY stock. You can see it's max. Goes up pretty stable. It drops here a little, but that's why I don't sell it, because the people that sell it lose money, and because it goes back up. You can see right now it's $434 USD. VOO right here. Price and performance. You can see it goes up, almost identical to SPY, but the SPs are all related to NASDAQ. You can see it's gone down today, but it'll go back up. There is some fees in these, but they're very small fees and good ones to take. You can see now we're on QQQ. Right now it is $341. It's gone down today, but that doesn't mean you should sell it again. You can see some of the prices and volumes it's been at throughout the month. So next I want to talk about that ETFs and these index ones are really good because they can be bought throughout the whole day. So unlike mutual ones, you buy them and then you have to wait until the price at the end of the day. So say the price was $200 and you would have to wait to the price at the end of the day. So if it went to $300, that's the price. But these ETFs, you buy them whatever the price is at that moment, and you can sell them whenever, unlike mutual ones. That's why I recommend them, and I think they're better. You can see some of these other ones. And yeah, so that's all I wanted to talk about today. And make sure to comment down below what you think about my opinion. Give me some advice, and we could talk. Make sure to like and subscribe. Thank you for watching.